In a stunning twist to the global steel game, Japan's Nippon Steel has just sealed the deal, a massive $14.2 billion takeover of U.S. Steel. That's right, the iconic American industrial titan born in the fires of Pittsburgh's steel mills is now flying a Japanese flag.
Ultimately, what happened was the President of the United States came in and struck a deal with Nippon Steel, making more and more demands, as we understood it through reporting since February, that ultimately came down to an additional $14 billion investment promise, in addition to the $14.1 billion tie-up. There's a point at which I think the President of the United States and his team looked at this and said, great, if they're going to continue to give us more and more in terms of investments, that's good for jobs, that's good for steel production in the United States. And one of the big ones here was the golden share, which we now have confirmation. The golden share does give a significant amount of power to the President of the United States. And it's not just Trump, it is in perpetuity. So we're going to see where that goes. I do think that opens up a whole new can of worms. Many people have been kind of questioning whether it would be an actual golden share. It's not an equity stake. But the fact that the President of the United States has a say in things like production cuts and capital investments, and whether or not they can move the headquarters somewhere else, is an interesting one that this steel industry in the United States is going to have to keep an eye on for the coming years.
What does this mean for American manufacturing, for the global economy, and why did Nippon Steel go all in on a 122-year-old symbol of U.S. might? Grab your hard hat, because we're diving deep into the deal that's shaking Wall Street, Washington, and the world's industrial power balance.
Some breaking news crossing the wire. After 18 months of negotiating, U.S. Steel and Nippon Steel have closed their $14 billion deal. The American and Japanese steelmakers announcing the news in a statement today. Nippon Steel and U.S. Steel reached a conditional deal with the Trump administration last week that allowed the companies to close their deal, first announced in December 2023, after the Japanese steelmaker agreed to invest an additional $11 billion in the Pittsburgh-based producer. The $55 per share cash deal creates the world's second largest steelmaker and turns the combined entity into a formidable competitor with the American steel industry. Nippon Steel also gets an important foothold in the U.S. that helps avoid U.S. President Donald Trump's 50% steel tariffs. The New York Stock Exchange halted trading of U.S. Steel shares earlier today, noting that the acquisition was effective.
America sells its steel backbone. Nippon Steel's $14.2 billion acquisition of U.S. Steel is more than just a business deal. It's the sale of a symbol. For over a century, U.S. Steel has been the backbone of American industrial might. It helped build bridges, skyscrapers, battleships, and the very idea of American manufacturing pride. Now, it's officially under Japanese control. That's not just business, that's a shift in national identity. Think about it. One of America's last steel giants is now headquartered in Tokyo. This isn't some forgotten coal mine being sold off. This is steel, strategic, foundational, patriotic steel. It's what built our tanks in World War II, our trains during the Industrial Revolution, and our cities from Chicago to Pittsburgh.
2023. United Steelworkers was against, and the Biden-era White House blocked the deal in early January this year over concerns one of the nation's largest steelmakers would end up under foreign control.
This takeover signal is a troubling trend. America is no longer safeguarding its industrial base. Politicians preach "Made in America," but actions speak louder. While Wall Street celebrates the short-term windfall, workers and welders across Pennsylvania and Ohio see it differently. They see loss of control, of legacy, of security. Because once the deal is inked, Nippon Steel gets decision-making power. They decide what plants to keep open. They decide where investments go. And don't be surprised if production shifts offshore. It's not paranoia, it's precedent. When iconic brands get foreign owners, American jobs often follow the exit door. In this case, U.S. Steel didn't just sell its assets, it sold its soul. And America might be the one left paying the bill for generations to come. Economic national security thrown to the wind. This deal isn't just economic, it's a matter of national security. Steel isn't like candy or sneakers. It's a critical material used in defense, infrastructure, and energy. If tensions rise tomorrow, whether with China, Russia, or even rogue actors, America needs guaranteed access to steel production. But now, our supply chain is no longer fully ours. A foreign entity holds the keys to a material vital for our tanks, aircraft carriers, pipelines, and more. Let that sink in. If a geopolitical crisis erupts, decisions made in Tokyo could affect our defense readiness at home.
The decks just hit, and I had a chance to look through them right before I got here. It's a $14.1 billion deal, which is what was agreed to in December of 2023, and an additional $11 billion in investments across the footprint of U.S. Steel. Now,
there's no guarantee Nippon Steel will prioritize U.S. national interest over corporate profit. That's not a knock on Japan. It's just the cold truth of global capitalism. When push comes to shove, multinationals answer to shareholders, not to the Pentagon. What happens if Nippon decides to cut costs by shutting down key plants in the Rust Belt? What if they outsource production to Vietnam or South Korea to improve margins? America's strategic autonomy could take a back seat to boardroom bonuses. We saw this with microchips, pharmaceuticals, and even baby formula. When you outsource too much, you lose control. When you lose control, you become dependent. America learned this lesson the hard way during COVID-19. Do we really want to repeat history this time with steel? It's risky, short-sighted, and potentially disastrous. Foreign ownership of a key industrial asset like U.S. Steel is like playing poker with your playbook exposed. You may think you're still in the game, but someone else is calling the shots.
We have two requirements for business investment: freedom of management and profitability. And the agreement with the U.S. government this time is fully satisfactory.
American jobs on the chopping block. Ask any union worker what this deal means, and you'll hear the same worry: layoffs. Nippon Steel may be promising to keep jobs, but we've heard that tune before. The ink dries, the headlines fade, and then the restructuring begins. A plant in Indiana suddenly gets consolidated. A mill in Pennsylvania gets modernized. Translation: people get pink slips, communities get gutted, the middle class shrinks again. Because when foreign conglomerates take over American companies, cost-cutting is standard operating procedure. They have no emotional tie to Detroit or Pittsburgh or Gary. It's just math to them. If closing 3 American plants boosts their earnings by 2%, they'll do it without blinking. This isn't speculation, it's history. We've seen it with Japanese acquisitions of US companies before, and it's not unique to Japan either. Foreign takeovers often result in job losses, benefit cuts, and the erosion of hard-fought labor protections. That means the union workers who built careers at US Steel could soon be facing automation outsourcing or outright layoffs. And it's not just the steelworkers who suffer, it's the restaurants, barbers, mechanics, and local businesses that rely on their wages. Once those jobs disappear, they don't come back. And no high-tech coding boot camp is going to replace the dignity and pride of generational industrial work. America's working class deserves better. They don't want handouts, they want opportunity. But this deal slams the door shut. It sends a message that no American industry is too iconic to sell off, and that no American worker is too valuable to sacrifice.
Nippon Steel closed its nearly $15 billion acquisition of U.S. Steel on Wednesday, the company said, and a big winner could be the Trump administration. Under the deal's terms, Nippon bought 100% of U.S. Steel shares as it first laid out in its offer for the struggling steelmaker in late 2023.
Globalization's final blow to the Rust Belt. The Rust Belt has been bleeding for decades. Once the heart of America's industrial power, it's now become a political battlefield, filled with shuttered factories and broken promises. And the Nippon Steel-U.S. Steel deal might be the final gut punch. Because while politicians talk about revitalizing American manufacturing, this move says otherwise. It tells workers in places like Cleveland, Bethlehem, and Youngstown that their factories are now foreign assets, subject to boardroom decisions made 6,700 miles away. We've seen this pattern before. Globalization was supposed to raise all boats. Instead, it hollowed out entire regions of America. We lost our textile towns to Southeast Asia. Our electronics industry went to Taiwan. Our automotive jobs scattered across Mexico and Canada. And now, the steel that helped win wars and build cities? It's following the same path. The Rust Belt doesn't just fear foreign ownership, it's lived through its consequences, and the scars are still fresh. What's worse, this takeover undermines American resilience. Domestic control of manufacturing is crucial in moments of crisis, be it war, supply chain disruption, or economic meltdown. With this deal, we've lost that leverage. We've handed it over for a $14.2 billion check that Wall Street cheers, but Main Street dreads. The short-term gains are tempting. The long-term damage? Catastrophic. When the next storm hits, be it military or economic, we'll look back at this moment and wonder, why didn't we fight harder to keep our steel American? What this says about America's future. This isn't just about steel, it's about the soul of American capitalism. When the crown jewels of American industry are sold off like collectibles, what does that say about our future? We claim to be a nation of builders, but we're becoming a nation of brokers. We don't manufacture, we merge, we don't invest, we offload. U.S. Steel wasn't some failing dinosaur. It had recovered from bankruptcy, modernized operations, and found new life. But instead of nurturing its growth, we sold it, fast, for a fat check. Because that's what American corporate culture rewards. Not long-term value, but short-term profit. And what happens when this becomes the norm? When every strategic industry is up for grabs to the highest bidder? Energy, defense, agriculture, they're all in line. If the US government doesn't draw the line here, it may soon find that nothing is left under its control. Global markets aren't patriotic. They follow profit, not flags. But nations need more than stockholder loyalty. They need sovereignty. And selling U.S. steel weakens ours. Future generations will inherit this decision. Will they inherit a country that can still build, still produce, still protect itself? Or just a portfolio of brand names with foreign owners and hollow factories? This deal is a referendum on what America values. And right now, it looks like we've chosen the fast dollar over the foundational industry. A nation without control over its steel is a nation living on borrowed strength, and that's a dangerous place to be. The $14.2 billion Nippon Steel-US Steel merger isn't just another corporate headline, it's a seismic shift. It signals how global powerhouses are positioning themselves in a new industrial era, where heritage meets innovation and borders blur. For some, it's a warning shot about foreign ownership. For others, a lifeline to keep American steel alive. But one thing's certain, this deal has forged a new chapter in steel history. Will it spark more mega mergers? Will American steel rise or rust? Let us know your take in the comments. And don't forget to like, subscribe, and stay sharp.